Health insurance can be confusing, so let's break down the basics in 5 minutes. Hi there, as always, if you have any questions whatsoever, you can reach us in the comments below or at the number on the screen. Now we're going to try to cover as much as possible in 5 minutes or less, but we understand that 5 minutes is probably not enough time to dedicate to health insurance, so please make sure to check out our channel and of course subscribe to stay up to date. And before you go today, make sure that you click that like button so that we can get this information out there. All right, let's dive in and let's start the clock. If you have insurance through your employer, this is known as group health insurance. Your employer is required to pay at least 50% towards your monthly premiums, and that's why COBRA is so expensive. COBRA will allow you to keep your exact same health coverage should you lose your coverage by losing your job for a period of up to 18 months. However, with COBRA, you would be responsible for your portion of the premium plus your employer's portion of the premium. Usually you'll have a choice between an HMO and a PPO. An HMO will often have lower monthly premiums, but with less flexibility. You'll need a primary care physician, you will need referrals to see specialists from that primary care physician, and you can only operate within network. So a doctor or hospital must accept your plan in order for you to have coverage. If not, you'll be responsible for the full payment. PPOs generally have higher monthly premiums, but with more flexibility. No primary care physicians required, no referrals required, and you have coverage in and out of network, although out of network will usually be more expensive than in network. Remember, if your employer has at least 50 full-time employees, they must offer health insurance to you and your dependents, although not necessarily your spouse. This health insurance must be deemed affordable, and that threshold does change on a yearly basis. However, you cannot be charged more or denied for pre-existing conditions. These same rules, of course, apply to marketplace plans. Marketplace plans and the ACA are sometimes referred to as Obamacare. You can log on to healthcare.gov to see the options available in your area, but you may be redirected to your state's individual marketplace website if applicable. You can enroll if you qualify for a special enrollment period based on qualifying life events. So these would basically be a change in household size, if there is an adoption, a birth of a child, a death, a change in location if you move, or a change in insurance coverage if you lose your job and therefore lose your insurance coverage. Of course, you can also enroll during the open enrollment period, which is every year from November 1st to January 15th in most states. Comparing plans can be a little tricky because benefits may vary widely. For example, some plans may offer adult dental or HSAs or even chiropractic care. However, all plans must offer at least the 10 essential benefits, which can be found on healthcare.gov. You'll also notice that plans have different associated metal tiers. Now, these metal tiers have nothing to do with the quality of the plan. It's rather to do with the cost-sharing breakdown. So for example, platinum plans will offer you a 90-10 split. So generally speaking, your insurance carrier will pay 90% of the bill and you'll be responsible for 10%. Gold plans have an 80-20% split, silver have a 70-30, and bronze have a 60-40. This isn't a hard and fast rule, but it's usually the way it works. And you'll want to compare other costs as well. First, there's the deductible, which is the amount that you have to meet out of pocket before your insurance begins to contribute to the cost share. However, many services will be covered prior to meeting that deductible, some with a $0 copay, especially if we're talking about those 10 essential benefits. Copays and coinsurance are the amount you will pay for a given service, and then there's the out-of-pocket maximum. Basically, that is the yearly spending threshold, and if you meet that number for in-network covered benefits, your insurance carrier would take on the remainder of the bills for that year. So it's there to protect you from major medical expenses. And of course, you'll also compare your monthly premiums. However, you may be eligible for a premium tax credit, which is just a tax credit paid up front, reflected in a largely discounted monthly premium. Your eligibility is determined by your income, so you will be asked to estimate your income for the upcoming year. Make sure to log any changes should there be changes in your income or household size. Now, if you're ineligible for a premium tax credit, then you may want to look into a type of short-term medical plan. Short-term medical plans are a private insurance, so they are not beholden to the same type of rules as ACA plans or group health insurance. So if you do have a pre-existing condition, you could be charged more, you could be denied, and at the very least that pre-existing condition will likely not be covered in the first year of a multi-year short-term medical plan. However, for a younger or healthier adult, they can be a great way to save money and still have access to really quality health insurance. Short-term medical plans also offer nationwide PPO coverage, which is nigh on impossible to find on the marketplace. Generally speaking, with marketplace plans, you'll just have the choice between EPOs and HMOs. EPOs will offer you a little bit more flexibility, but not to the extent that PPOs will. You can also really sort of pick and choose your benefits to make sure you're getting a plan that's tailored specifically to your needs. And another good thing about short-term medical plans is that there is no open enrollment. You can enroll at any point during the year. Now, of course, short-term medical plans are not for everyone. For example, if you have a lot of pre-existing conditions or pre-existing conditions that are difficult to treat, they may not be for you. If you are pregnant or looking to start a family, short-term medical plans are likely not the way to go. Or even if you have younger children, they may not be the ideal choice. And remember, short-term medical plans are actually not available in all states. So we didn't quite make it in 5 minutes, but it was important that we at least covered the basics in this basics video. Now, if you have questions, which I imagine you do because this was a very consolidated video, you can of course reach us in the comments below or at the number on the screen. If this is your first time with us, this is an acknowledgement that we are licensed nationwide and there's absolutely no charge for our services. So truly, if you do have any questions, feel free to reach out and we are more than happy to help. Additionally, make sure to check out our channel because there are plenty of things not covered in today's video. For example, we have videos dedicated to catastrophic coverage, critical illness plans, long-term health insurance, HSAs, and many more. So make sure to check out our channel and please do subscribe to stay up to date. And of course, most importantly, click that like button so that we can get this information out there. As always, thank you so much for watching and have a wonderful day. Bye-bye.